This conference will now be recorded.
So in the last class, we have been discussed about how we can be able to do the retail business model. So we took it as an example of Walmart model. So have you been received any document on this regards yesterday? So have you been received any kind of document on this regards? Please let me know. Okay, I think have been not sent. So let's check it out. It is not there. Fine. So once after completing, I'll just share it. Okay. So in the last class, we have been seen with the assumptions. So the details what we have been received it. So through the related to this retail business, and on this basis we have been calculated with sales values, and we have been incremented with the values of 10% on the sales price, cost price at 10%, and quantity wise 5%. So the calculations were been done on the driver's sheet. Then the same thing we have been connected to the income statement. Here we are learning it that how we can be able to connect to sheet values. So previously we used to see that how we can be able to connect it with the cell to cell on the same sheet. Now we are been trying it to get connected with the sheet to sheet values. So now after calculating the income statement, so we have been got with the net income, that is a profit after tax. So the same value was been connected to the balance sheet, and we have been calculated with the retained earnings calculation, and same way we have done with the accumulated depreciation calculation also. So we have found out the difference, the value of cash balance were not been added, so which we have to find it out in the cash flow statement. So there is a difference. So let's try to match it with the balance sheet, how to balance with the values. So we have been left out with cash flow statement. So let us see that how to calculate with the cash flow statement. So equals to the PAT or net income was being brought by income statement. So select this value and drag it out for the other years. Then depreciation value. So this depreciation value also was been already given in the income statement. Let us select it with this and drag it. And less working capital change. So how do we do this working capital changes? As we know that whenever you are going to calculate it, any values related to the liabilities, working capital, so it shows under the liability side, and I've given the formula on the right hand side that it is you have to take the current year value minus the previous year value, so that it will be equal to, so the working capital was been given in the balance sheet, so take this minus from the same balance sheet the previous year value, so and drag this values. So the current year value minus the previous year value. Yes. So the next So these are the things which were included with the cash flow statement values. So here you are going to calculate with the total value of cash flow from operations. So that it will be equal to the net income plus depreciation value minus the working capital value. So let me drag it for the last. Next, the purchase of asset value. So this has been connected from the again balance sheet. So equals to balance sheet the PPE fixed asset value then we also have a formula for assets. So that is it should be previous year value minus. So previous year value was 0. It should be minus with current year value from the balance sheet PPE gross value. Okay. So now if I drag this, okay, just a moment. Mhm. So let me get this value. So it was for the capital expenditure value we were calculated in this way. So let me add this because it is not supposed to be with the minus value or any value for the further years. So let me add it the value equals to minus of balance sheet value. Sorry. Yeah. So this is the value. So the rest of the years, because we are going to purchase the asset only one, we are not going to invest it on the asset again and again in the years. So it will be remained as 0. And cash flow from investing, it will be only one value. The next thing is the debt raised value. So this has to be connected from the debt schedule. So the debt raised value was equals to, from the assumption, it was 55 lakh and the amount was being raised. That means it was being raised at 55 lakhs, but it was being cleared from the next year onwards with partial amount. So that amount, it was a repayment schedule. So let me drag this value. So this comes, you can see the total sum of value is 55 lakhs. So here it been asked that how much the debt was been raised and how it was been repaid it. So we have taken the values from the assumptions values. So the next thing is equity raised. So here the equity, it was 45% on the balance sheet if you go. So it is the equity value is, yes. And it has not been raised again and again in the future. So let it be as a zero. Then cash flow from financing, that is the total value is equals to sum of the above values. Yeah. So one more thing I was supposed to add is, it was supposed to be like when you are going to repay this amount, so it has to be minus, that is it is going out of our hand, cash is going out of hand. So in the cash flow statement, whatever it comes in, we have to show it in a positive, whatever goes out, it has to be minus. So let me put that minus value and drag it. Yeah, so now it comes fine. So the sum of all these values will give me the net change in cash. So this is the value what I get it. Then cash BOP value is 0. Beginning of period value was nothing was there. End of period it will be equals to the net change cash in value plus the BOP value. And the next year it will be equal to previous year closing balance. And this will be equals to this value plus this. So let me drag it. Okay. So now this value I'm supposed to bring it to balance sheet. So this cash on end of period, whatever the value is there. So this value I'm supposed to connect it to balance sheet cash balance. So that is equals to cash EOP value. And if I bring all those values, you can see that the balance sheet has been balanced. And you can see that there is the changes in the values. And here the interest income amount. So that is in the income statement, interest income. So there is 12% of income is expected from the cash on BOP value. So let me go here, equals to whatever the value we have it, the cash flow statement BOP value from the year 1. On this 12% is expected income. So let's see that whether it will have any impact. Yes. Let me check it out with all the values. So let me check it out with the balance sheet values. Is there any changes? Yes, it's correct. And the cash flow statement. Yes. So it is calculated in a right way. Okay, fine. So now by keeping all these values, so how we can be able to calculate the returns calculation. So here it has been already been assigned. So that is the cost of equity is expected at 25%. You can be able to see it over here. And the free cash flow statement value, it will be calculated based on the CFO plus CFI value plus debt raised minus debt repaid amount. Okay. So after doing all these calculations, so we are going to get the value with 45 lakhs. So let me do with the values calculation. So which will be equals to, first let me remove the values, equals to so CFO plus CFI plus the debt raised amount. So which gives you 45 lakhs. So this is the formula what we are going to use it to calculate free cash flow values. And if I drag this, so I'll be able to get the calculated value based on the given details in the cash flow statement. Then here there is a value of calculation on net present value. So what is this net present value calculation is? So how do you calculate the present value by keeping the future cash flows? Okay, so this is the concept of calculating the NPV. So here we are going to use with the cost of equity value by taking the year 1 to year 4 value and plus with the year 0 value. So let me do it with calculation. So NPV. So the rate of cost of equity is 25%, comma. So values are taken from the year 1 to year 4, close the bracket. plus the year 0 value. So this is how you are going to calculate what would be the present value, and the IRR value will be calculated on the cash flow values equals to IRR. So which gives us the internal rate of return up to 45.87% value on it. Okay, so this is how you can be able to calculate with net present value returns and the internal rate of returns value on the given assumptions. So just have a look. I'll be sharing this document to you people on the WhatsApp group. So have a look on this document and let me know that in case if you are finding it any difficulty on this calculations. So I've been shared the document. Please have a look on this. So hope you are able to download that file. So can confirm. So is that you are able to download it?
Yes, sir, we can download it.
Yeah, just have a look on this and let me know that in case if you are finding any difficulty. So give me a few minutes. I'll just share you one kind of an questions. So what kind of questions you are going to face it? So when you are going to have a exam on this, okay? So just give me a few minutes. I'll just get back to you. So let us have a 5 minutes of break and we'll get back and we'll resume the session. Thank you for being online. So, hope you are able to hear me. And can you just check it out with your WhatsApp group? I've been shared a link. Can you just let me know that whether the link is working or not?
Yes, sir, we can open it.
You can open it. So, I request everyone to take this exam. So, it is kind of an test for your uh, what all the concepts till now we have been completed. So related to that, I have been just prepared a few questions just now. So you just go through with that and you can attend with that. So let me see that how many of them are able to take the exams. So how well you can you have prepared. So where you are supposed to get prepared. So that I can be able to get to know. So please take this and let me know once it is completed. If anyone has already started to take this, can you take the screenshot and can you send it to the WhatsApp group so that I can get a confirmation that it's working for you people? Anyone?
Oh, you want a screenshot of the form?
Yeah, just take open that form and take a screenshot and send it to me, and then you can carry on with your exam.
Okay, sir, I'll do it.
Do it. Yeah, thank you, Noren. So this is enough. You can go ahead. As the test is going on, please let me know that who are all taking the exam. Sorry, test. So they can type it as me. So the people who are taking the test now, please type it as me so that I can be able to record the people who are attending the test. Okay, good. That's really good. So except Noor and Fatima, Umayma, Madhu and Kavya, others, so I request them to take it as a test. It is only just to refresh your learnings, what you have been done till today. So there is no nothing like you are going to get a very less marks or zero also, it's okay. But I want you people to attend with this test. Even if it is zero, no problem. So it will not be affected to your final exam marks. So, but in case if you are going to try with this, you will be able to take up your exam at an easier way. So that is what the intention it is to make your learnings and your uh, earnings out of the exam marks. So to make it easy, both of them. So I've just prepared this test. So kindly take it. Yeah, thank you, Sinjana, for taking it. So I request Rashi, Ruchita, Raghavi, and Emily also. Please take up the exam. Okay, Ruchita is already taking. Sorry. Rashi also she is taking. That's very good. So left out is Emily and Raghavi. Raghavi and Emily, I think you people have been attended most of the classes. So I expect more than you, more than from you people. So kindly take it up. Is that anyone finished with the exam? I mean, test. Is it so difficult? Nurin, are you there online?
Yes, sir.
Yeah. Is that going on? The test is
Yes, sir.
going on.
I have one left.
One left. I think someone has completed. Okay, Kavya has completed. Good. Kavya, how was the questions? So are you there online? Kavya, are you online?
Yes, sir.
Yeah, how was the questions? You have finished it.
It was fine, sir. But I don't know if it's right, some questions.
Okay, okay, okay. You couldn't find the answer?
Yes, for some questions.
Okay, okay. Is there any kind of doubtful or you
Uh,
didn't hear those concepts only? Is it like that? Anything like
no,
that?
no, sir.
Okay, fine, fine. Thank you for taking up the test.
Thank you, sir.
Okay, Noor and Fatima also has been taken. Good. So we shall wait for a few more minutes and we'll see that. So a few more are yet to finish it. Good. Even Sinchan has been completed. So even Umayma has been completed. Good. So even Madhu. Thank you, Madhu. And I think still Rujita and Rashi are yet to complete. So I request Ruchita and Rashi, and also okay, Rashi has some network issues. Fine, Rashi. So fine, you can take some more time and you can submit it. Even Raghavi also, I request if she is online, so let her complete it, as well as Ruchita. So complete it. Okay. Once you accept it, I can be able to check with this. So I think yeah, Ruchita has been completed. Good. So Rashi, you can be able to finish it after some time. Okay. So thank you all for giving your precious time for taking up this test. Hope this has given something reminding with all the concepts what we have been discussed till today. Okay. So thank you once again and have a nice day.
Thank you, sir.
Thank you.
Thank you.
Thank you.